Hi folks, Scott here, and this is the wrap for Thursday, November 14th. So tomorrow is Options Expiration Friday, a very unique and important day in the markets, and an interesting one to trade, especially on the heels of a new 50-day high close. It's actually 200-day high close and probably a 400-day high close, hundreds of days of new highs. Highest price right there, market is just rocking. OpEx Friday tends to be a unique day that can either be a very good setup or a poor setup, and on the heels of new highs, the same can be said. So let me show you the results of fading gaps on Friday of options expiration week, actually specifically options expiration Friday, after a 30-day high close. 30-day just to keep the sample size large enough to be relevant, but not something as short as, say, 10 days. And I'll go to Gap Trader, my back testing tool. And there you go. Odds about 50-50 in terms of which way we're likely to gap tomorrow. Gap up historically using an end of the day stop has been extremely strong. High win rate, high profitability. Gap down has been about an average win rate, but you've had some trend action to the downside, and the average win has been less than 2 points. The reason I know that, you take the dollars here, divide by 500, and that accounts for 10 contracts and $50 per point. So average win is small on the downside, small on the upside too. It's just extremely high win rate. So when I see numbers like this, it makes me think about doing possibly an early entry. Just a little food for thought. If you can, I don't do many early entries, but I've been doing more and more of late on the really strong setups. Today was one I wanted to do, but could not, unfortunately, due to some family logistic issues. And let me talk about that. Or actually, let me talk about today's setups, because all was not lost. These gaps did melt away into the open, which I'll get to in a moment. But first, look at how good the data was for a gap up today. It did have one very unique twist I'll talk about as well. So gap up, average of all 8 indices for today, strong numbers, more than 60 at 1.3, my minimum criteria for fading gaps. So looked very good there. Up gaps Thursday of OpEx week, also strong. Bullish outside day, more of a neutral setup, nothing really concerning though. And my comments, a couple of the unique patterns. Last night's video after closing at least up at least 1% above its open, and at a 20-day high close or higher. Weak data, a little concern there. But end of day odds were very good. So when you see, that's a pretty significant number there. Delta of 6 out of 20 trades sold off, or I should say rallied against you before rolling over. That's why you have the largest disparity between the end of day stop here, the numbers which look awesome, and the fading at the open with MTG stop parameters. So that told me we might want to delay an entry. I talked about this in last night's video. And let's see what else. Small to mid-sized gaps after not closing at a 5-day high one day, but then closing at a 50-day high the next. That's actually a good setup. I actually thought it'd be a little bit riskier than it was not. And here's a unique one. Fading up gaps during a bullish market when the Nasdaq's gapping down. Only happened 20 times. I'd call that neutral to slightly weak. What was interesting though is I looked at what if the Nasdaq was gapping down more than 5 points, which is what we had today. And there was only one other trade in the past 11 years. So this divergence is very interesting in the market, and I'm not sure what it means. If the Nasdaq catches its bid, which I'm more inclined to believe that's what it does this time of the year, then I think this market may have some more legs to the upside, but we'll see. Bottom line, I thought the gap guide showed an attractive setup for today, mostly positive factors for the unique data, and only that Nasdaq divergence was really the one concern. So it was enough of a concern combined with the small gap size for me to be very picky. So I said I'd do a half size position, but had to open above 1782. And that would allow me to get my stop more than 2 points above Globex highs, which were at 85 1/4. So I wanted to have my stop well above to give me some room. And as you see when I show you the charts, the market just sold off into the open. And with since it did not open above 1782, I said as long as the gap didn't fill immediately, I would enter short on a delayed entry, which was almost a perfect plan. Let me show you what I mean. So there's the Russell, which sort of struggled all day. Nasdaq gap down significantly, 9 or 10 points. for rallying and filling. So that's that counter pressure I'm talking about, which helped lead the markets higher. See how the ES ripped to the upside? Didn't want that happening right at the open. The ES, though, did not open in my criteria. It filled, which was sort of good news, bad news. I know quite a few of our members took it right at the open following the plans. Good for you. Actually, it did it on the very second bar. It's hard to see. Then it bounced all the way back up to 82 1/4, hence the 15-minute and first hour number. That exact number I was looking for rolled over and filled. So had it not gone a ticker, had it stopped a tick or two shy of gap fill, I would have been in it. But you know, you have to have rules. Follow a plan. I was comfortable with it. It was on a 1 1/4 point opportunity to settlement price, which was 17.79. Risk of 6 points for 1 1/4 is tough to do in any scenario, even in the best of scenarios. Today I tried to thread the needle a little bit with a good plan, just didn't work out. Now the good news is all was not lost. I had data from Closing Odds, which I just checked, my new website, which will be officially live by Monday, hopefully this weekend sometime. And it favored pretty strongly closing to the high side. Math showed historically you made a lot more being long in all day than being short. So with a long bias based upon my 5 systems at Closing Odds, which again for members, don't worry about it, you don't have to become a member. This information will be turned into closing guides and available on the MTG site soon at no charge to you. But with that long bias, it's such a bullish market, I wasn't going to overstay my welcome. I was not going to hold any for the extended target, though some of the data was decent. Again, I missed it. But check this out. With that long bias, look at the 15-minute range guides. Favored the low fade. I'm looking for 55.1.1. Check. Check in the Dow. Neutral in the NASDAQ. Check in the Russell. 3 out of 4 clearly favoring. Check in the Spider. Check in the Diamonds. Neutral in the Qs again. And a little bit neutral there. So 5 of the 8 met my criteria, but that was more than enough for me, combined with the end of day biases, to get long. I was actually a guest in another trading room today. Some folks that are I'm helping out, and they're promoting us, sort of a win-win relationship. And I got long at 17.78 1/4, which I called out in the room, scaled out +2 and +5. Sorry about that. So I set up an order that I called out at 17.78 1/4 for +2 and +5. And actually, I erroneously calculated +5 at +7. I had the bracket order set up wrong. Been nice to have not caught that mistake. It's funny how you catch the mistakes that cost you money, not the ones that save you money. But nonetheless, it was a great trade. That was the only trade I did all day for 15-minute range trade low fade. So we'll see what tomorrow brings us, but that was my day, and that is the wrap for Thursday, November 14th. Have a good one.